Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the slightly late running. My apologies, just a little issue before I came on, but the slightly late running Tuesday, the 6th of December, Bull versus Bear webinar. Steve Muddy on the call for trade day. Welcome, everyone. I'm going to go for our usual regular run through in here today. We'll take a look at the calendar, what we've had, what we've got coming up. We'll take a look at the articles from the major news wires. What are the macroeconomic fundamental events that are impacting markets right here, right now? And we'll take a look at the charts, what's going on in the charts. But first of all, before we do all that, a bit of housekeeping today. In just a few hours' time. In fact, in 2 hours, 27 minutes and 0 seconds, 26 minutes and 58 seconds, we have the next Trader Mind live stream. James and I are together. James is currently working in the UK. So we'll be broadcasting later today, 9 a.m. Central, 10 a.m. Eastern. That is 3 p.m. this afternoon UK time and 4 p.m. Central European time. So please do join us for the next Trader Mind session here. James and I presenting that later today. So, what's been going on in the markets? Well, let's talk about, just look at the what we've had and what we've got coming up. Very little so far. German factory orders this morning, slightly beating expectations in here. Going into this afternoon, we've got a fairly light calendar overall. So really the trade data out of the US, not expecting to do too much in the markets in here. So it's a very light calendar going into today. So not expecting too many fireworks from the calendar. Anyway, let's go to 5 things you need to start your day. So markets were significantly lower yesterday. Not actually talk about it here, but I'm going to jump to that. So Wall Street size of service data spooks investors about Fed rate hikes. So the PMI data was the concern in here. Kind of somewhat perversely in here, better than expectations. We had some positive news from China previously, but also some negative news. Tesla saying cuts its output plans for Shanghai plant for December. So that was a negative for Tesla, but that obviously dragged maybe the market down a little bit in here. But the main thing in here was the US service sector PMI data. Also talking about it here. Some of the ISM, US service industry regains steam, factory orders accelerate. So, that this is seen as a negative, even though it's positive, a positive for the economy, positive for the economy. The market is then looking at that. Well, that means the Fed will be could potentially be more aggressive, and it might see inflation pick up as well, okay, because it's generally stronger economy. So all of that adding up to potentially inflationary pressures and potentially the Fed, who seem to be slightly backing away. Powell obviously saying more recently slowing the pace. So look, we're back in. There's comment in here from this chap here. We're back to inflation fighting mode in here. So so the market taking positive data on the economy as a negative in here. That's always a difficult one to contend with, really, in the markets. But that's the way the markets are reacting at the moment. Positive for the markets, negative for the stock index, and positive for the economy, negative for the stock index. So, and US futures overnight, as rate bets thrown into doubt. Okay, so strong economic data heats pressure on Fed to keep tightening. So that's the problem in here. Being summed up there. Let's go back to 5 things to start today. So professional investors obviously are loading on bets that a recession can be avoided. Okay, so we're actually seeing, according to a study from Goldman Sachs. I've been saying it. I think the US will be on the edge of a recession, but I think it won't be a hard landing. It won't be a particularly hard landing. The UK, maybe Europe, something different, but we do have a different dynamic with the impact of obviously Ukraine being felt that much more through energy prices, etc. in here. China reporting fewer COVID cases, that should be a positive. And nothing else too much in here. US futures overnight fairly quiet, and coming up, trade balance data. Not really that important in here. So a fairly quiet, amount of news. But then the markets, as I say, really reacting kind of negatives, to that. Futures subdued after a sharp Wall Street sell-off on Fed worries, and those Fed worries being driven by that ISM data. Oil was also lower. Oil holds decline after West market slump. And again, oil lower on just the same factors in here as we go to risk off. And oil prices fall and higher US dollar, and the dollar strengthened as we went into risk off as well. Overnight in here, this morning, European bourses are slightly lower. 0.3 on the UK FTSE, about 0.2 on the German DAX, and just over 0.2 on the French CAC index. So we're lower in Europe. And if we look at where we are on the futures this morning, kind of actually a little bit of a bounce after yesterday. So we had a slight bounce between 0.1 and 0.3 on the NASDAQ across the major news wires. Just a little focus on the CME tool in here. So you see in here the peak is back at 500 to 525 on rates in here, 500 to 525 on rates going into the middle of next year, June, July of next year. We're seeing that. And then if we go to here, I've already done this one. So going out to June of next year, you see in here. So I've deselected all of these, but we still have in here the 475 to 500 and 500 to 525, and you can see in here on the 475 to 500 in here we've kind of been sort of meandering along in here. Okay. But if you see the 500 to 525 now up at the top end of where we've been for the 500 to 525. So showing in here that there's a growing chance of a higher peak in rates. Okay. And that's certainly been what we've seen through this week. Through the rhetoric, through the data from Friday, strong jobs market data, strong ISM data yesterday, meaning the peak in rates. It doesn't mean that if we go back to just where we are on the... So I don't want the historic on here, I want the current. This is not moving really for the December. So basically, everyone's believing Powell, we're going to slow the pace of hikes. So we're going to do a 50. This is unmoved, right, from yesterday. But what we're saying is the peak in rates in here going out to June, July is more likely to be the 500 to 525 now rather than the 475, So, but then looking for potentially a cut going into the early part of next year. If we do go, the late part of next year, if we do go up to 500 to 525. So stocks are certainly lower. We're still kind of contained within this marabou. So we did take out support though. We did go below yesterday's low, and it does set up more negative in here for me. We put this Fibonacci. So that's the impulsive move that we saw after Powell last week. That's the impulsive move from Powell. And then on the sell-off that we got on Friday after the jobs data, we kind of held at the 60. We held right at the 61.8. We obviously took that out late yesterday, and since then it's not the best bounce in here. And if we go and put the fib on for the bounce from the low, let's just take it to the peak in here from yesterday. You can see we're kind of been hovering around the 23.6. If we actually took this up, if I go take this up, if it will allow me to drag it. Oh, why does that never work? Up to the high. Yeah, you're sitting right below the 23.6. If we take it off the high, I just need to go a little bit higher on that. There you go. Look, it's fading almost exactly at the 23.6 of the whole move from the peak from last week, through to the low of yesterday. We're failing. Look, bang on the 23.6. Failed once, failed twice, and lower. Now, if we get above the current overnight peaks and above that 23.6, that 23.6 is coming around 40.15.5, just above the current overnight peaks, and we failed there twice. I think that's an important level. Then you've got a little mini base goes in, and I think it can offer upside. But for now, whilst below there, I'd prefer to be shorting into that level, that's resistance area, between 40.14, 40.15. But if it breaks, then probably stop and reverse for upside, okay? So that's how I would be looking at that one. It's a similar story if we go and take a look at the NASDAQ. So obviously didn't actually undercut the low, okay, in here, didn't undercut the low, all right? So if I go into the NASDAQ on the 15-minute now, there's the low. Remember the low again was at the 61.8. So the NASDAQ held at 61.8, held again. But again, if I go to the sell-off in here on the fib, I'll take it, say, from here through to the peak here, you can see we're right around the 23.6. We're actually nudging above. The Nasdaq's actually showing some strong leadership in here. We're actually nudging above the overnight highs. So you could argue the base is going in. If the Nasdaq completes it, there's another little swing peak there. I don't know if you can see that one in there. Make this a bit bigger. That little swing there. That swing there is 848 and a quarter, which we're not quite through. Yeah, through 848 and a quarter looks more positive for the Nasdaq as well. So that's the next trigger. If that takes it out there, then I fully anticipate the S&P will be up through this 23.6, up through that 1415 area. But at the moment, the S&P, and at the end of the day, this is the benchmark, right? The S&P, not the Nasdaq, right? Okay, you sometimes get some leadership from the Nasdaq, but this is the benchmark. And although the Nasdaq has led us back higher in here, on the way down, we didn't undercut Friday's low yesterday. Okay, you can see that here on the 15, and now we are forming a slight better base in here. We're just taking out the overnight high in the last 15-20 minutes in here. But yeah, I think it needs to get above that level. 848 and a quarter, 848 and a quarter. It starts to look a little bit more positive, and then that could then see similar signals going back onto the S&P. So watching out for those levels top side. At the moment, you have to come into this slightly negative, but it's taking out those levels. Let's take a look at gold and oil. First of all, gold on the daily. Big sell off yesterday, is rebounding in here this morning though. So even though it was more negative post yesterday, you do have a double bottom formed already, right? Through that low there, double bottom, but you've almost already hit the measure. We're also above that equivalent level there. That's the equivalent level that we just identified on the Nasdaq, right? And also the breakdown point here. We're back above the breakdown point. We're back above that little previous peak there, okay? So gold actually forming a base in it. So and gold maybe, given we've got the positive correlation between gold and stocks, maybe gold telling us where stocks are going. So as much as I'm kind of coming into this with a slight negative disposition on stocks, any kind of small upside from here, as we just looked at, gold is already telling us potential base going in. Let's take a look at oil. Oil, though, down and dirty, gone lower after yesterday's sell-off, even lower than in here this morning. Looks vulnerable to the downside. Could only be bearish on here. Big sell-off yesterday. Dead cat bounce. Another sell-off in here. No bounce coming. Can only be bearish on oil. So, yeah, staying negative there. All right, guys, I'm going to wrap it up there. It's a very brief one there. James and I will be back with you let's go back here. So in 2 hours, just over 2 hours, 15 minutes. Okay, so come back in here. Remember, you need to come in here, resources, go into the trading room, resources on the drop down, trader mind sessions. Okay, and we'll be streaming in there, right in there in 2 hours, 15 minutes. We'll see you back here then. Any questions you have for us, anything you want to ask, please ping it through. Support@tradeday.com, probably the best place. Send it through there and we'll try and answer any questions, but we'll just be doing a run through. Oh, we got this as well. Ask Us Anything. You can go to that as well. Ask Us Anything at tradeday.com. So if you want to ask us anything, or just send it to support@tradeday.com. Any questions you have for the Trader Mind, and we'll pick those up in just over 2 hours time. Hopefully see you then, guys. Until then, have a great trading day. Bye.